Hi, this is Joseph. It's Friday, August 8th, 2014. The market is officially closed for trading for the week. And in this video, we're going to review a few trades that we took on Friday. I had a couple of students that asked me if I would make a video and I would elaborate just a little bit more. We talk about it in the chat room, but they wanted to get more detail. They wanted me to make it into a video so that way they could download it and then keep it and review it as often as possible. So we're going to talk about how to identify certain areas where we could potentially see retracements and trade opposite of the major trend. In this instance, what we're doing is we're trading a different type of technique. We're trading a reversal off of support or resistance inside of consolidation. So here we're looking at the 30-minute time frame for the dollar Swiss. What we do is we look at, this was actually Friday's trading range right here, all that information there. I'll go ahead and show you what actually took place, but then we'll go back to the actual setup and I'll explain what I was doing. So on Thursday, we had a high and a low. This was my trading range for Thursday here on the dollar Swiss 30-minute time frame. And basically what I'm doing is trading a reversal off of either direction. Now you'll notice right here when the rollover period occurred, that's indicated by this white line here. That's that 5 p.m. New York time or Eastern time. That's the rollover period. Price was in the middle of this range, approximately, or pretty close. Sometimes price will close towards the highs. Other times price will close towards the lows. And then again, other times, just like on this particular instance, it closed approximately in the middle. So I had to wait. I didn't get a signal right away when the rollover period occurred. I didn't get a trading opportunity. I had to wait for price to come back up and approach either resistance or support within a 10 pip range. So I'll go ahead and take this out a few candles. And here you can see with that high of the previous day, that high was 91.04. And this high on that spike was 90.98. So it reached that 10 pip range. Now, if you're interested in how I actually do that and what a 10 pip range is, I have videos that will walk you through exactly how I use this strategy. You can actually use it and trade it on any currency pair. I highly recommend using it on a 30-minute time frame. And if you're going to execute this trade or try it out yourself without really having a full understanding, please paper trade it or use a demo account. Do not use this technique on a live trading account if you don't have a good understanding of the trading strategy. But I walk all of my students through this step by step, explaining exactly what I'm looking for and exactly when we get into the trade in the alumni chat room. So in the chat room, what we were doing is we were waiting for price again to reach that 10 pip range. It did so, and then it printed this reversal signal candle. Now, reversal signal candles again are either bullish or bearish engulfing candles, or evening stars or morning stars, depending on which direction you're trading it in. And in this instance, we got a a bearish engulfing candle. That was perfect. I wait for that candle to close. It has to approach that 10 pip range, and then we look at the CCI indicator. And the CCI indicator has to print a lower reading on that signal candle than the spike high of the previous day, the CCI. It's got to print a lower reading if I'm going to sell it. And here I got full confirmation. So our entry is on the close of that candle when we get the signal. Here it closed at 90.92. So we use a 20 pip target, and our 20 pip target, the first target here, is 72. If we get in at 92, it's 72. That's our first target. Now, very often what we usually will see is price will just reach the first target. It doesn't always continue to the second target, but it does happen often enough where price will move to a second target that you should prepare for it and prepare for the possibility of trading to maximize that trend that develops afterwards. We're just looking for a 20 pip target. That's it. If it hits the 20 pip target, and if you can scale out at that first target, then we would look for an additional 20 pips. And the additional 20 pips is the second target down here at 90.52. So what happened was, once we got into that trade, the very next candle, it immediately dropped. We actually got into the trade as this was beginning to make its move to the downside. And within that first 30-minute candle, it reached our first target here at 72. Now I have to tell you, it doesn't always work like this. It just depends on what is happening at the time you get the signal. Sometimes you have to wait a little while. Sometimes price will sort of bounce around a little bit and then find a little more momentum towards your target, and it takes a little while. Sometimes we can be into an hl30 trade and it'll take 2, 3, 4, 7 hours. And then again, other times just like this, it really depends. This was Friday, so there was something taking place here where price started to sell off right here at this resistance point. So let's take this out a little bit further. So we earned approximately 20 pips from our entry to the first target, And if you can scale out, again, I highly recommend scaling out or perhaps adding 2 lots to every trade whenever you trade this technique, because again, this does happen often enough that you can maximize your trades, just like I'm going to show you that what we actually did on Friday. So I told all of my students that I was actually closing my first half of my position here at 72. The next target would be an additional 20 pips. So with this, once price reaches this first target, we set any open lots or any open remaining position to a break-even stop. So price would need to come all the way back up here to approximately 90 to stop us out at break-even, but we would still lock in the profits from the first half of the position, earning 20 pips here. It's just on the second half of the position, we would close it at 0. But that's not what happened. It continued. It pulled back a little bit, tested the old support level right in here. There's a little pocket of support right in there, which became resistance. There's that psychological level of 80. Here's the daily fulcrum. That also created a range or a pocket of resistance as well. And then price continues to move back down a few hours later and then spikes down and hits our second target here. So effectively, what you could have earned is, if you had 2 lots on this trade, is 20 pips. You would have earned 20 pips on the first lot, entering here at 92, closing the first lot at 72. But the second lot would have remained open with an entry of 92, but you would have closed it here at 52. You would have earned 40 pips on the second lot, earning a total of approximately 60 pips on this trade by executing 2 lots on this technique, using this technique. So it's a highly effective trade that gives you the opportunity to safely trade, affordably trade, I should say, because again, this is a 20 pip target. We know exactly what our risk is. We know exactly what our reward is. And if the trend continues, it could actually pay more on the euro dollar. So here I'll go right back to, this is again Friday's trading range. This is the hl30 on the euro dollar, and this is Thursday's trading range. This is the rollover indicating the new day, which was Friday. And you'll notice that again, just like the dollar Swiss, price closed approximately in the middle of this trading range. There's the high, there's the low. So at that point, again, the hl30, we do nothing until price reaches either resistance or support. Now, I'm not saying that there are no other trading techniques that you could be using during the price action inside of this trading range. What I'm saying is, if we're going to execute hl30 expecting the same targets and using just these same simple indicators, we've got to respect the rules, and we do nothing until price reaches either the high or the low within that 10 pip range. So price came down here, spiked, and tested that support level. That low on Thursday was 1.3336. We need price on the new trading day to come down within 10 pips. Price here on that low went to 42. So it qualified within that 10 pip range. At that point, all we have to do is wait for a reversal signal candle. Now remember, the reversal signal candles are either a morning star or evening star, or bullish or bearish engulfing candles, depending on which direction you're trading it in. And since we're trading it off of support, we saw this bullish engulfing candle. It really does a little bit of both right here on that candle. Strong candle. This was our actual entry. This was a little bit different than our entry on the dollar Swiss. The dollar Swiss actually printed a reversal candle before this strong move, all at the same time. The euro dollar was a little bit late in giving us the signal, but nevertheless it was still a valid entry. So we enter on the close of that candle, that reversal candle. The CCI gave us positive confirmation to trade this to the upside. We get in on the close of that candle. The close of the candle was 1.3363. That's our entry. We know we're using a 20 pip target. So our first target here is 83, and if the trend continues, the next target would be 3403, another 20 pips. So we're just looking for the possibility of getting into this trade and taking the first 20 pips, and if the trend continues, we take a second 20 pips. And then there it spikes right up in this single candle and hits the first target. We closed the first lot here at 83. So again, in the chat room, I'm watching this price action with all of my students, and as we saw this reversal, I told them I've got to wait. I know we've already got the signal on the dollar Swiss, but I've got to wait for this one here on the euro dollar. The euro dollar gave us this entry. Again, I'm getting in at 1.3363. I use my microphone in the chat room, and then I type in the trade details, and I also have the trade details right here on the chart, and I show my chart in the chat room so that all of my students can do the exact same thing. And then I tell them when I'm taking my profits. I use my microphone and I tell them I see price here reaching 1.3383. I'm taking my first half of my position here at the first target. I've earned approximately 20 pips. And then I'm going to set the remaining half of my position at a break-even stop. And if price continues to the next target of an additional 20 pips, I'm going to close it here, second half, at 1.3403. And that's exactly what happened in the same candle. We actually got all of our profit targets met within that same candle. Again, something happening in the marketplace that actually provided the opportunity for us to do so. It's not always going to look like this. Sometimes it's going to take a few more hours and it'll bounce around. So this one actually earned us the same number of pips. Remember, if you're scaling out and you close the first half here at the first target, you earn 20 pips. But if you have another lot open and you get in at 63 and you close the second lot at 3403, you've earned effectively 40 pips from the entry to the final target on the second half of your position, earning the equivalent of approximately 60 pips. We did the same thing on the dollar Swiss that I just showed you. That's 120 pips that we earned total if you were able to participate in this opportunity and this trend as it unfolded, not to mention the trades that we took on the pound dollar or any other currency. So again, we were trading opposite of the trend. Remember, we sold the dollars from the very beginning of the week, safely, comfortably, and very, very carefully, taking pieces of this overall retracement. And I can show you exactly how to use this technique and how you can do the same thing when the markets create the opportunity for us to make money just like this. And I will be there every step of the way when you're executing these trades. If you ever hesitate, if you ever start to feel that maybe you're not doing it correctly or you have any questions, I will be there right there with you. You can always ask me questions while we're trading live in the alumni chat room. Now the next coaching session is going to start in just a few more days. There's still more time for you to actually reserve your position. If you go to my coaching website, which is theforexcoach.com, you can click here on coaching class login right here. That will actually take you to a page where you can submit your email address and get on the list for the next coaching class. The next coaching class again starts in approximately 9 days. And while you're there, you can also watch some of our update videos from earlier in this week. I haven't uploaded this one just yet, but you can watch some of the earlier videos that I posted on Tuesday and Wednesday of this week. But nothing can ever replace having a coach there with you, side by side, walking you through these strategies so that you can make money safely, securely, and consistently, and then turn those trading strategies into your own trading strategy. So it's part of your plan, part of your trading business. And that's what the one-on-one Forex coaching class is all about. Again, it starts in just a few days. Thanks again for watching this video, and I look forward to trading with you someday.